The Gold Group's annual gold conference in Denver. I'm here with Paul Benson today, the CEO of Troy Resources. Paul, how are you doing today?
Very good.
Good to meet you.
Thank you for having me.
Pleasure's mine. Now, Troy Resources is an existing producer, but there's been some very exciting developments as of lately. Could you initially address that?
Sure. We've been a producer since 2000. We listed on the Australian Stock Exchange in '87, so we have been around for a while. We dual listed on the Canadian Exchange in 2008, but I think really now we're getting to that point where the story is one that's going to be interesting in the North American market. The new project we're building in Argentina called Cusposo, that's a high-grade gold-silver deposit. It's what's called a low sulfidation epithermal, which the reason junior companies tend to like those is when you find one vein, you tend to find more. Probably the best example of that type of deposit at the moment is Andean. When they acquired that project, they started with 500,000 ounces. Today they're up around 3 million. We acquired this project last year and we started with 600,000 ounces. We went straight into construction. We didn't do any more exploration. The project as it stood was excellent. And we've got a track record of building mines quickly and at low cost. We've transported a plant we had in Australia in storage across to Argentina. And we're at the very final stages of construction for that. So we expect to start processing ore next week. So pour first gold either at the end of this month or beginning of next month. And really, I think the key drivers from a value point of view will be grade. It's an excellent deposit. We have a month's mill feed sitting on the stockpiles already running at 9 grams gold. And I think at the bottom of the pit at the moment it's running around 20. So high grade, the first quarter should be excellent. There's a high silver credit to the ore. Over the life of mine, if you look at gold cost net of your silver credit, the average life of mine cost is about $120 an ounce, so very low cost mine. So that's one value driver. I think the second one will be exploration potential. As I said, we haven't been exploring yet, we've just gone straight into construction. We're about to start exploring. We've got a budget of $7 million for this year. The first drill rig will start next week, the second drill rig will start in the month after. But we have a lot of drill targets ready to drill where veins outcrop have been channel sampled, have gold but have no drill holes in them. And so that's why we like to look at that example of Andean where they started with 500,000, got to 3 million. You know, we could only dream about doing half as well as that, but you know, it's a nice dream to have, and we certainly believe we'll be there for a lot longer than what the current mine plan indicates.
In terms of your growth profile, what kind of gold output are you forecasting over the next several years?
Yep, we produced 60,000 ounces in the year just gone. We work on a June 30 year.
Sure.
And for this year that we've just started, we're forecasting a 100% increase, so going to about 120,000 ounces. We'll peak in 2012 financial year at about 150. And that's driven predominantly from Argentina, but we also have a small mine in Brazil and Arenas. And that's where we get the total production from. At the moment, that's the peak production, but again, driven by the exploration potential, you know, we believe will be a plus 100,000 ounce producer for many years to come.
So what will your overall cash cost be a year or so from now?
If you look at Cusposo running, I can't say in the exact year, but the life of mine average 120, which will have more 2/3 of the production, 1/3 of the production coming out of Brazil at a higher cost, probably at around $600 an ounce. So you'd be looking at the average below 400.
With such an ambitious mandate and ambitious plans that you're already implementing, what kind of treasury do you have at this time?
With this project, we've used a bit of debt funding. Second time in the company's history, but recently we've relied on equity. This time it was quite simple thought process in terms of throws off a lot of cash. Rather than issuing additional equity, we've tapped the debt market. We've got a $25 million facility. On our cash flow forecast, we won't draw any more than say 15 million of that, and that project, because it produces so much, we'll be able to pay that facility off within 6 months. So for an Australian company, we've been very tight with script. We only have 87 million shares on issue, which for an Australian company is quite few. But no need for additional funding in the foreseeable future of anything we have on the horizon.
So is your ultimate mandate to become a mid-tier producer?
Absolutely. We know we're on the treadmill. You can't stop and relax. So we've been focused in the last 6 months for building this project, but we're still looking for the next one. Just the way the market has moved with a rising price, it's probably unlikely that there's such a great deposit for sale on the market the way Cosposo was. Obviously one of the likely outcomes is potentially a merger. And so we continuously look at all the opportunities. In addition to knowing we have to do it, we're not in any hurry. We believe that our share price is still undervalued, so we want to get the mine into production, see that value reflected in the share price, so that if we do get to a stage where we're looking at a merger, we know that the script is fairly valued.
Okay. And finally, are there any other key points or developments that would be of particular interest to investors?
I think in terms of the way the company has evolved, we've gone from one which was a predominantly Australian retail story to a more international investment opportunity. We've gone from very few institutions, now they make up probably about 40% of the register. It's become more international. 25% of the shareholder base is the UK, 15% North America, 60% in Australia. And with the institutional interest, so the broker interest is coming too. And I think the whole Argentinian story is just becoming that much more exciting. Driven a lot, recently by the Andean bid, but there are a lot of good deposits with a lot of potential. So I think it's one that our story will become more compelling in the Northern Hemisphere.
Well, Troy Resources is clearly a rising star in the junior gold space. I wish you continued success.
Thank you very much.
Thank you.
Thanks for the time.